welcome to this week's Lucia Capital Group Weekly. My name is Ray Lucia Jr. I'm the CEO of Lucia Capital Group. And this week, because obviously we're not in the studio, we decided to do things a little bit differently and showcase some of our video conferencing technology and our ability to connect with not only you, our clients, but also our team members all around the country. And so today I decided, why not give it a shot? Let's bring in Chris Lloyd, who's one of our CFPs, CHFCs, 25 years experience. I've known Chris since, and going back almost 20 years, maybe actually 20 years now, Chris. And Chris runs our Scottsdale, Arizona office. And so Chris and I were talking. He's got a lot of great content that he'd love to share and get out, and some encouraging words of wisdom. And so I'd like to welcome Chris here to our Lucia Capital Group Weekly.
Hey, thanks, Ray. Sitting here in our Scottsdale office, as you know, there's a couple of us here, Steve and I, and so we can practice our social distancing right here in the office. So we're happy to be here today.
Yeah, technically, I guess that's professional distancing. And for everybody who's curious to know, we're about 90% remote, and about 10% of our people are actually still coming to the office. Some prefer to go there because, you get stir crazy in the house. Others, there's some mission critical stuff like getting the mail and whatnot that we need to do. And so that's where we are. And so, Chris, welcome. I know you and I were speaking before this about some content that you'd like to share from Vanguard, American Century, even Market Watch. And it all kind of ties right back into overall financial planning and playing the long game. So why don't we just jump right into it? This Vanguard piece I thought was very interesting because people are talking about V-shaped recoveries versus L versus U. So why don't we jump into the Vanguard piece?
Yeah, I think that's where I'd start. Is there seems to be this consensus of sorts among Vanguard and Fidelity, and even today, Ben Bernanke, the former Fed chief, was quoted as saying that he thinks it's going to be a V-shaped recovery. So one of the things about the Vanguard piece that I thought was interesting, and all this is recent, up-to-date stuff, is that when they look at it, they look at their forecast going 10 years out, and they run a variety of scenarios. And in that forecasting, they said, because valuations of stock have come down, our forecast for stocks over the next 10 years in terms of annualized return has actually gone up. They were expecting about 4.5% before, now it's about 6.5%. So they're saying that's the bright side of this downturn that we're experiencing today. Market Watch and others looked at past viral epidemic type downturns, and most of the time the recovery from that historically has been very quick, even with as short as 12 months. So that's where you're getting all this information about V-shaped recoveries. Fidelity did a similar piece and such, but I know we of course go longer term than that, Northern.
Yeah, and then bringing in perspectives, there's been other scenarios where haven't been such sharp V-shaped recoveries, and we like to say, we want to hope for the best, but make sure we plan for the worst. And so let's go through. It's the American Century piece, correct?
That's right.
Why don't we put that up on the screen so everyone can kind of see all the different periods of recession drawdowns and the recoveries? And what's your take on that, Chris?
Yeah, the American Century piece is a piece that I like in good times and bad because it helps remind us that bear markets can be significant. It looks at 13 past bear markets and shows you the downturn periods, how long those last, and what the recoveries look like in 1 year and 5 year and 10 year points after you hit that trough in these down markets. And one of the points they make is after 5 years, on average, when you're looking at these bear markets, you're back up to about 109% of where you were at the bottom. So that means you've basically gotten back to whole. You've recovered from that. So that tells you some bear markets can take at least 5 years to recover.
And that dovetails right into the reason why we do a bucket strategy. We remind everybody almost every video now about our bucket strategy approach, but it's interesting to think that there have been periods of time where it's taken 5 years just to get back to even. And so, having a segmented or bucketed approach to your portfolio, plans for these long extended periods of time.
No, that's exactly right. From a bucket standpoint, we usually build out a plan with folks we work with where we've got 5 to 7 years of fixed assets in a bucket one type environment. And we might even have another 7 to 8 years worth of fixed or balanced assets in a bucket too. So we want to buy that 7-year to 15-year kind of time horizon to be able to weather these storms and allow for potential growth in bucket 2 and bucket 3 over the long term.
Yeah, I love that, because people, and I can't say this in absolute terms, so I'm speaking to the world here, people who are working with a financial advisor, right, aren't 100% in stocks.
Right.
And so don't need to count on this V-shaped recovery, because they're not invested in stocks and spending money out of stocks directly for their income needs, right? So I love what you just said about that.
Yeah, there are two things that I find helpful at this moment in time when talking with people that I work with. Number one is when you see the headlines about 35% down in the S&P or the Dow, and then you come back to your portfolio and say, how far down am I? Well, perhaps if you were 30 to 50% stock, you're only down 15% or 18% or even less. And so just recognizing you're not as far down as the headlines allows you to take a little bit of a breath and go, okay, maybe it's not as bad as I felt like it was. And then the second thing I like to do is I like to look at how much bucket 1 we have versus how much we're withdrawing from the portfolio each year, and simply divide that. And so if in bucket 1 we've got 5 to 7 years worth of conservative assets, then that tells you bought yourself that 5 to 7 year time horizon that we were just referencing in past bear markets.
And honestly, and that's why I love hanging out with you, Chris, because you're able to take such big, complex issues and boil it down just to so simple terms that the everyday American can understand. And this has been great. And other than the technology interrupting, and I mean that's one of the things that goes on these days is you've got stuff beeping at you all day long. But I do truly thank you for taking time today, hopping on this video with me and sharing this information out with all of our followers out there on our email list and our clients and everybody. And it's very helpful information. And with all this technology, I just like to add that it's bringing, at least for me, I can say it's bringing our company closer together. Even though we're further apart, we're having more communications every single day. I mean, just the other day, we had over 60 people on a video call. Can you imagine seeing it's kind of like Hollywood Squares times, however, 10. So, well, that would be 90, but you get the point. Lots of different faces and everyone's able to communicate. So, but beyond just our business, this kind of stuff is happening in businesses across the country and even across the world. And, if there's a bright spot to take away from this is I kind of feel like the world needed it. And this is more a cleansing or a purge, so to speak, because the world is so hateful, so divisive, politics and race and whatever. It was just getting to a point where we needed something. And maybe this is a blessing in disguise, right? And so it's not just bringing businesses closer together. It's bringing countries together, our country, communities together, and even families. Families are even closer together because of all this stuff. And on the backside of all this V-shaped, U-shaped, L-shaped recovery, what I really truly believe is the end result is a stronger society altogether and stronger families, which makes this a stronger country. And so hopefully that you guys can all take something like that away from this as well. That's how I prefer to look at this entire environment here in 2020. And the last thing I want to say is, if you got any ideas or suggestions or comments, you want to send them directly to me. The best way to do that is send an email to me directly at askrayjr@luciacap.com. And then I also don't want to forget this. Chris is a special guest on our upcoming episode of our podcast, Managing Your Financial Future. And that's coming up here very soon. So please subscribe to our podcast. If you don't know how to do that, there's going to be instructions on the website where this video is posted below, as well as links to do all that. And so I encourage you to follow the podcast as well. And once again, Chris, thank you. And thank you to everybody for watching this video today. And take care and God bless.
Thank you, everybody.